Poker asks, since you use the wealth building blocks, what would your rule of thumb to risk in the stock market after you pass money through an infinite banking policy? What would your rule of thumb be to risk in the stock market after you pass money through an infinite banking policy? I haven't actually thought about a specific rule of thumb for money that you can risk. But I will say in general, without not just using wealth building blocks alone, but we like to use dynamic banking, so we're maximizing our cash flow. And when we're doing dynamic banking, if you've already paid down debts that you have to pay down, and now you're utilizing that function, and whether you're using dynamic banking with a line of credit or your policy, in this case as an infinite bank, but it functions like a line of credit. If you're on the positive side of the equation where you're using it for wealth building, that's where you can use chunks instead of throwing chunks towards debt. I would be comfortable putting chunks into some investment. Now that could be, preferably you're going to fund your Roth first if you can. Once you max that out for the year, you're going to fund, well, then you can look at just getting into the stock market if that's where you want to be investing. So if stock market is your choice of investing, which I've been having a lot of fun doing that lately, that's how that would be a basic rule of thumb, I guess. If you're using those extra blocks, the chunks that you would throw out, I would feel comfortable using that, putting it into the stock market, because we're basically playing with the house money when we're doing that. We're borrowing for free, and we're using our paychecks to offset the interest charges on that. So it's a good opportunity to create some arbitrage there. If you're going for short-term profits, make your short-term profits, put them back in, and cover the costs of borrowing. As far as the wealth building blocks go, that's a much deeper conversation. Wealth building blocks, I would definitely point you to watch my videos, especially the most recent one, which was revisiting. Check out my last video that I did on that. It's called Revisiting Wealth Building Blocks. The idea behind wealth building blocks is how to maximize your infinite banking policy. Get up to your MEC level. So I kind of view those separately, utilizing the wealth building blocks as turning them into something that you would risk in the stock market, if that makes sense. We utilize dynamic banking to create the space that gives us the ability to put towards investments. Our wealth building blocks is just about maximizing our policies and getting as close to that MEC as we can. This was a question asked and answered during one of our Wealth Care Wednesdays live streams. If you have any questions, leave them in the comments section below, or join us on one of our Wealth Care Wednesday live streams where you can ask the question and we'll answer it on the air live. Hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time. Now go maximize your cash flow.